Let's first just get a distinction on what it is that you do principally each day.
Each day I have a responsibility of understanding what is going on in the markets. I speak to some of the senior bankers that are represented in London, London's financial cluster, which in fact is the largest conglomeration of financial services businesses in the world. And we've got more foreign banks in the city and Canary Wharf than New York, Paris and Frankfurt combined. So that gives an indication to your viewers as to the size and nature of this business. So I'm in touch with them regularly. There invariably are issues which pop up. We've been through the sort of bonus debate. We're going through the levy at the moment, which is being proposed by one of the parties, should they be successful in our forthcoming election. But that is on a unilateral basis, and I haven't spoken to anybody since Saturday morning, but there will undoubtedly be some response to that.
Now, is it a tough sell trying to attract business back to the City of London, given the hangovers of the recession and how the UK has sluggishly struggled to get out of there?
Well, what you've actually got to understand is, in fact, the economy of the City of London as a financial centre is very, very different to that of our UK domestic economy. There is a linkage, and the linkage is actually in terms of the fiscal take that the UK economy benefits from having that cluster in London. Last year, £61 billion was received by the UK Exchequer as a result of the financial services activity in the UK. But the economy for the financial services industry is driven on the global basis. So it is successful when global financial services is booming, bearing in mind it does a lot of business outside of the UK. You take Morgan Stanley, I think that they say that only 20% of their business driven out of London is actually UK and Europe. Right.
Let's talk about business sentiment, because even if the city's financial services is a bit dislocated from the general state of the economy, people do look at the overriding environment. We're told that growth in 2010 would be a very modest 1%, in 2011 3.5%, and even people say those figures are a little bit too optimistic. The Chancellor of the Exchequer will be delivering a budget today, and apparently those figures will be reforecast, and anybody wanting to do business in London will be looking at that.
Well, there's a lot of opportunity as a result of that in that environment. I mean, people I've spoken to in the Gulf states, I've been to 4 of the countries in the Gulf states so far. They're very confident about going back into London. We look as to what has happened through the recessionary period, where asset prices have collapsed, certainly within the real estate market sector. They are very keen to understand what's happening in that market, whether it's bottomed out and when to come back in. So there is a great interest of investment going in London, that is into the UK economy. As well as those using London's financial services operators as a means for raising capital from wherever they come from around the globe.
Let's talk about the focus on London and on the need for regulation since this entire credit crunch emerged in 2008. Basically, the feeling was that there was too much of a laissez-faire attitude in London financial services. It was too liberal. There's a much greater need for regulation of hedge funds. There's a much greater need of cutting executive bonuses. And there's also just a need to really curb excesses in the London financial services industry. Now, as you're trying to attract talent to the sector, those are disincentives in many ways.
You're absolutely right. I mean, in terms of regulation, I think that Lord Turner, Adair Turner, owned up to in his review in January of last year about what went wrong within the regulatory framework that operates out of London. They are undoubtedly looking to heal some of those failures of the past. They've learnt lessons and they've responded. You only have to talk to the banks, and they'll tell you how far more almost aggressive is the word that one of them is using, that the FSA actually is. It needs to be proportionate at the end of the day, and I think if you look at the banks and where the banks are today with their corporate governance and the responsibilities of the directors of the banks, they're probably being better regulated internally than they have been for a long time.
It's an election year. Everybody's expecting the election to be in May. It's a close call so far if you're looking at opinion polls, but it is quite possible that there could be a change of government by June of this year. Are investors anxious about that situation because there might be a remodeling of the UK economy?
I think that some people are looking for a change in some areas. I mean, it doesn't mean to say that the present party that's in government won't bring some change themselves. What people are looking for is some stability. We've been having our election period running for the best part of about 6 months in reality, and it's an unofficial election. The last outcome that the city wants is a hung parliament. we're not used to consensus politics in the United Kingdom. We want leadership, and we want to be able to have a government which has the authority and the support of a majority behind them to move forward and take some very tough decisions as they start to deal with the budget deficit that we've got to address, and address proportionately.
Right. Now, before I bring in Kirby, your 10 years for 1 year, and part of your mandate is to visit something like 20 countries the world over. The focus of emerging markets in terms of your portfolio, how strongly do they feature in the work that you're doing?
Well, very much so. I mean, I will be going to South America. I'll be going to Brazil, which is very, very strong in burgeoning and coming forward, one of the great BRIC countries. I'll be going to Colombia. And I'll also be going to Mexico. So they're within the portfolio. I'm going to the Far East, I'm going to Indonesia, and I won't say that, but on top of that I'm going to 2 main centres.
What are you looking for when you're there?
Well, we're trying to build the relationships, because there will be a growing world order in terms of financial centres in the years to come. The economic strength and growth is undoubtedly going to be coming from the East in due course. London wants to remain one of those major centres at the table. There will probably be 4 or 5 in the fullness of time, and it's forging and building partnerships, which is why we in the City of London go and help, and looking to help support Shanghai build their centre.
All right, Kirby, your turn. London financial services come under a lot of heavy criticism and flack in recent years, and the Lord Mayor is saying yes, there needs to be some kind of scrutiny, but basically everything is well and good, and people are quite committed to doing things the proper way in London.
Yeah, I mean, look, it takes a crisis to bring certain failings in the system to the foreground. And I mean, it's not just it's financial services organisations in London; it's right across the globe. So and you'll see even the fact that we haven't dealt with these kind of issues in emerging markets doesn't mean that we might not deal with these issues down the line. You'll see a trickling down effect as far as regulation is concerned from these kind of hubs down into emerging markets at some point. Where there's good governance, and these become the new rules as far as governance is concerned. Maybe just on the side, I mean, the City of London has been a financial hub for probably the better part of 300-400 years. It's always been, a place of trade, and it's always been a place where people have congregated, through the ages. And this is just what it's morphed into what we're seeing today.
Can we dislocate the City of London from the general state of the UK economy, where growth is at about 1%, where the government has a bloated deficit, borrowing over £180 billion and needing to rein that in?
Look, if the general state of the British economy starts impairing on its ability to provide financial services, obviously financial services organisations in the city will start saying, well, maybe I shouldn't be here, maybe I should be elsewhere. The problem is that the location of the city, the fact that you have so many other trading organisations with you around in a central area, the fact that you can trade across the globe from there, and the fact that you have the ability of the city to underpin that makes it quite difficult to go elsewhere.
Lord Mayor, just a final comment and question. Many people have said it's one thing to really try to stabilise the financial services industry in London. It's also very important to boost manufacturing in the UK and push up exports. Has that started to feature in the ambit of the work that you're doing in terms of promoting trade as well as basic services in the financial centre?
Absolutely right, and it's one of the reasons I'm here in South Africa. When the President came to London some 2.5 weeks ago, he brought with him a delegation of 216 businessmen and 12 ministers. And one of the key components of the agenda, whilst they were over there, was debating areas of where we can work together to build the bilateral trade. And so we had people in industry outside of the financial services sector listening, talking, and came up with a rationalisation as to where the focus should be. And they've identified 7 sectors covering mining, infrastructure, health, ETQ, education, training qualifications, where we should be working together to help, and that is therefore clearly outside a lot of my daily remit, help build our respective trading relationships and double, hopefully, the bilateral trade over the next 5 years.